Oh boy, the time has officially come. YieldMax has released a brand new fund targeting GME. The wait is over. The time to investigate this ETF is right now. So stay tuned, right? We're going to do just that, right? So launching today, the YieldMax Fund Manager has released a brand new ETF targeting GameStop. The ticker symbol is going to be GMEY. They are seeking to generate income via their strategic synthetic call credit spread, put credit spread, yada, 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 trading strategies. So let's go ahead and dive into the press release that they've launched here on their X page. Press release. Okay. Brand new fund coming today. Tidal Investments is the investment advisor for GMEY. It's going to be the newest member of YieldMax family, and like all YieldMax ETFs, they aim to deliver current income to investors. They may not hold the NAV, but they're going to produce you income, quote, quote. With respect to distributions, GME will be a Group C ETF, and its first distribution is expected to be announced on October 15th of 2025. Okay, so I don't see anything other in this article, right? So this is just the typical, they announced the distribution amounts for these funds with GMEY coming to this group officially starting next week. Jumping over to their website, we will see they don't have a whole lot of information yet. We'll be interested to see what this distribution yield is going to be. It's going to be obviously what the IV is for GameStop. But same old, right? You're looking at a 1% expense ratio for them to kind of sell these call spreads on your behalf. Starting at $50, I think that'll be a good move. They started a lot of the other funds at much smaller prices. So looks like some of the positions they have so far, obviously they have their treasury bill positions, but they also have created these synthetic positions. So you can see they did not do it 1-for-1. So September 12th, so this upcoming week, they purchased 525 or 25.5 calls. As you can see, 25.5, 535 of them. They also sold 24 calls. So that is a call spread. So they are bearish on a GME. I have no idea what GME is currently trading at. I'll have to take a look at that here in a second. But they're hoping they don't reach $24 by this Friday. October 17th, they also have the same type of position. Looks like they're actually selling. Looks like they sold a cash secured put at the $23 strike price, and they purchased $23 calls. So they're creating some type of synthetic long position there as well. Pretty cool. Nice. So let's look at GME, look at the price of GME and see what it is currently trading for. GME. Okay, so looking at the price of GME, it's currently trading for $23.59. Past 5 days, it's up 8 cents, so pretty flat. Past month, it's up $1.18. Past 6 months is up $1 or 5.22%. And year to date, they're down 23%. So what we're looking at, they're shorting the 24 call. So they don't have a whole lot of runway. 40 cents is all that they are away from this short position there. So that's going to be something they're going to have to manage. And then yeah, like we talked about, the one expiring on the 17th is more of like a synthetic long. So they sold a 23 put and bought a 23 call there. So we'll be interested to see kind of how this fund performs. I imagine there's going to be some NAV erosion, obviously like a lot of their funds, but you can strategically use these income funds. So we'll see. Hopefully they can do a little bit better than some of their other funds, right? Hopefully they can learn from some of their mistakes. But yeah, if you're looking for an income ETF, do keep in mind that is the objective of this fund. So if you have a long time horizon and you're just planning on dripping the dividends indefinitely, I would probably look for other options, right? But if you need income today, this month, in the very short term, this might be an investment you can take a look at. Definitely seek your own financial advisor and do your own research. Not a financial advisor here. Any financial advice, this is education purposes only. But for me personally, right, like I think it makes sense if you want income, like right now, like if you want to allocate a certain part of your portfolio for income right now, to not drip, right, to actually yield. And yeah, that is my thesis. And that's what I think these funds make sense in someone's portfolio for. I don't think, like, if you have a long 20, 30 year time horizon, it makes sense to invest in income funds and then just drip them, right? Because you're paying taxes, you're paying a pretty expensive expense ratio, plus just the total return is not going to be the same over 20, 30 years compared to just purchasing a growth ETF or a growth stock. That's just my thesis. So, but yeah, once again, if you're interested in this type of fund, like we talked about, it's an income fund. It's going to be capping your upside. It's not going to perform well over 20 to 30 years. It is going to, produce income very, very well, right? You're not going to have to sell shares. You're going to purchase it one time and continually get income, as long as, the line doesn't completely tank, and gets delisted or anything like that. You're going to be able to continually get income from this fund indefinitely, hopefully. Disclaimer, take everything I say with a grain of salt. But yeah, GME is a brand new fund from YieldMax. Let me know your guys' thoughts down below. It's going to be added to the Group C funds from YieldMax.